Welcome, everyone, to another Monday Market Update with Kristen Mason Coreas, owner of the Homes by Mason team. Today is Monday, September 23rd. Coming to you live a little bit later than 1 o'clock. I'm usually here around 1 o'clock. It's a busy Monday. We did put a listing on the market. Sorry, my brain is ahead of my words at the moment. Put a listing on the market this past week, so have been busy with that. And we have another listing coming on the market this week, and we have 2 buyers closing this week. So we have a full plate right now here at Homes by Mason. Happy to have a full plate, grateful for that, and happy to be here to share with you the most up-to-date information on what's happening in the real estate market. So you might have heard the big news from the Fed. So the Fed met last week, and they did drop the Fed rate by 50 basis points. That is a big drop, as I understand it. This is a little bit outside my scope of expertise. I study this stuff because it does impact our mortgage interest rates. And so mortgage interest rates as of Thursday were around 6.09. Let me see if I got a message back. I did reach out to our favorite lender to find out what they look like today. I've not yet heard from them on that, but we're hovering around 6%. I mean, that is great news considering we were almost at 8 near the end of last year, and we've been very near 7 for a lot of the time this year. So to be near 6% for interest rates is a fantastic place to be. Are they going to go down further? We don't know. Maybe yes, maybe no. The expectation is maybe yes, but not by a lot. I've said before, and you may have heard me say that if you watch me, if you follow me, I don't know how many followers I have out there. If you follow me, please give me some love so I know I've got some followers out there. In any case, what I have said previously is that the current interest rate that we've been seeing a drop in interest rates in previous weeks as leading up to the Fed meeting. And so that's because the expectation, it was pretty clear, it was pretty certain the Fed was going to drop their rate. So interest rates came down in anticipation of that. And so therefore, how much further will they come down now that the Fed did drop their rate? Probably some, but maybe not a lot, maybe not drastically. That's kind of what we're expecting, and we're in wait and see mode. So I shared with you before. These are the mortgage rate projections for 2025. And you can see where we are as of last Thursday is below, frankly, where a lot of the projections were these were projections for 2025. And Wells Fargo were the most recent projections that had come out. So they might be the most accurate here, because if we're at 6 now, 609 as of Thursday, and if we come down further, then we'll probably dip into the 5s. So of course, these projections are going to change as we move forward. So know that projections are just that, but and this goes to show you that the earlier projections are probably off based upon where we are as of last Thursday. So in national economic news, the Fed dropped their rate in an effort to try to make sure that the economy doesn't implode, basically, as I understand it. Again, I'm a little bit outside my scope of expertise here, but they've been, as I understand it, maintaining their rate where they are in order to try to control inflation, make sure inflation comes to where they want it to be. And when they did drop the rate, it was, as I understand it, a sign and a show of confidence in where we are, and also an effort to avoid economic falls, economic drops, things going bad with the economy. The concern is that the economy could go bad if they keep their rate too high for too long. So this economic news here, you can see there are some positive signs currently in the economy. So that's good news. As of September 19th, retail sales showed a surprise gain in August. So that's consumer resilience. People feel comfortable buying things. That means that people are currently financially feeling okay with how much money they have in their pocket. Jobless claims fell last week to the lowest level since May, indicating a healthy job market. So another sign that the economy is doing all right. Now, here's the other thing that in my world of real estate that I understand a little bit better is I'm constantly looking at supply and demand. because that impacts how much buyer activity we have, and that impacts what happens with price. And supply has been the issue that we've had. We've had too little housing supply for a very, very long time, driving prices up. So to see here, home builder confidence edged up in September as mortgage rates fell. So builders are feeling more comfortable building, which will increase supply. And housing starts bounced back in August. So again, that's building, reaching the fastest pace since April. New permits for building have climbed also. All of these are signs that supply is going to increase. Now, interesting enough, why I put this red arrow here is because we have been seeing supply increasing overall. And if you watch me, if you follow me, because there's been less buyer activity, there's two ways that inventory can increase: by new homes being built or by less buyer activity. And so we were seeing less buyer activity as a result of the higher interest rates, which caused inventory to increase. And so home sales fell more than expected in August. So with these two things happening, then we may continue to see more increase in inventory. And this also, the other concern that I've been hearing is concern about affordability in the housing market. So house prices have remained elevated despite a continued improvement in supply. So maybe buyer activity will decline if affordability is not good. Now, that decrease in interest rate should help affordability. But if buyer activity continues to stay low and home building increases, then the market's going to turn. We will see a turn in the market if inventory is increasing and buyer demand is decreasing. So that's a TBD. We'll watch and wait there. But that's kind of what I've now got my eye on to see. We should expect buyer activity to increase now that interest rates have come down. We should see that. So for the Mid-Atlantic region data that we have here, new contracts are above 2023 for 3 weeks in a row. So that is showing that there's more buyer activity in the Mid-Atlantic region. Listings spiked over last year. So again, this is an inventory marker. So in supply has been recovering and is continuing to increase. And then showings nearly matched to last year. So I would expect showings to increase rather than match last year because interest rates are better now than they were last year. So showings are on par with 2023, only down 0.2% from the same week last year. So with mortgage rates, yeah, it says with mortgage rates declining, more homes available, potential buyers may feel more confident entering the market. So we shall see if more buyers are coming to the market to gobble up some of that inventory or not. And then that will impact what happens with prices. For the DC metro area, zooming in a little bit closer to our market, we are seeing showings increased just a bit by 5.6% from last year and basically flat from last week, which is interesting. Now, purchase contracts up 30% from last week. That's a big jump. So that definitely shows an increase in buyer activity from last week, only up 8.7% from last year. Time to contract, a median 24 days in the DC metro area, up 3 days from last year, down 5 days from last week. So this may show us that buyers are coming back to our local market. New listings are up 22.8% from last year, down from last week. And active listings are up 22.5% from last year and up just a touch from last week. Median list price up 5.4% from last year and actually down from last week, which is seasonally. So that is normally we do see prices come down this time of year. So that doesn't scare me. And we shall see again, buyer activity, supply and demand is really what drives price, right? So we're going to see what happens now with the supply and demand. We're going to keep an eye on that. So in our hyper local market that we at Homes by Mason run for you each week, looking at specifically Arlington, Alexandria, Falls Church, and Fairfax, where we do most of our business. And this is data here as of last Monday up until yesterday. So the most current, most local data that we have for you shows us that listings went up just a touch, 4% up to 448 new listings from 431 the week before, but contracts were down So that's interesting. 333 new contracts compared to 358, down 7%, leaving us with a 74% demand to supply ratio, healthier than we have seen most of the year. So frankly, folks, I'm not exactly sure what to make of what's happening right now in the market. Our listing, I will say, didn't get as much showings as I would have liked to have seen. Now, it is a condo, so the condo market is a little bit different than townhomes and single families, which we usually sell. There are typically more condos available, so we shall see. But yeah, there's kind of some mixed messages here in what's going on with the market in terms of inventory increasing, and we should see that buyer activity increasing, and we're seeing some of that, and in some cases we're not. So continue to come back here and watch what's going on with the market with me, and hopefully we'll stay ahead of the market and be able to be proactive rather than reactive to finding out after the fact what the market is doing. So this slide, I wasn't sure if I was going to need it or not. The home price forecast for 2025, I did share this last week. And basically, we don't know what's going to happen, right? So this is just a reminder that these are projections as of 9/11, September 11th this year, of what prices will look like next year. But if that buyer activity doesn't go up and supply does, then I would expect these appreciation numbers to come down, and I would expect prices to moderate, which a lot of people are saying that's what the market needs. Affordability has been the concern for a lot of people, that homes haven't been affordable for a long time as interest rates have been going up. And so where we are now at the, right around 6%, we will see if that eases the affordability concern enough or not. Or does it need to come down more for more buyers really to get back into the market? Do prices need to come down? Do interest rates need to come down? We will find out. So that is today's Monday Market Update. Thank you for watching. Please follow me on Facebook and subscribe to our YouTube channel. It's the Homes by Mason channel in both of those places. And if you ever want to talk to me about your circumstances individually and when might be the best time for you to buy, sell, or invest in real estate, or if you want to dig deeper into the stats and trends, if you want to look at it more locally, even specifically to your community, happy to do that with you. So you can call me anytime at 571-210-1866. Call me or text me there. Email me at kristen@homesbymason.com. Check out my website anytime at www.homesbymason.com. Thanks for watching, and I will be back next week. Have a great week.